Hey guys, so on one hand, when it comes to overall growth, for me, didn't really exist when it comes to the month of March. But when it comes to dividends, I actually had a pretty good month. As a matter of fact, I broke a milestone, which is amazing. And in this video, I'm gonna detail that along with the dividend stocks that paid me a dividend for the month of March, how much that came out to be, how that amount compares historically for me, so everything in the past, and what that could potentially look like in the future, along with some dividend goals that I have, a little bit repetitive, a little bit modified, but something that will hopefully get me far in the long term. All right, just as always, we're gonna start off with every single company that paid me a dividend for the month of March. So starting with QILD, that paid me $2.56. Target paid me $6.34. That was the highest check I received in March. Kroger paid me 75 cents. UPS paid me $1.93. ExxonMobil paid me $2.51. Microsoft paid me $1.16. Main Street Capital paid me $1.37. Hershey paid me $2.92. Realty Income paid me $2.43. Stack Industrial paid me 72 cents. McDonald's $2.93. Stocks, which is a semiconductor ETF, paid me 90 cents. Home Depot paid me $2.34. Main Street Capital $1.65. SPHD paid me 93 cents. SCHD paid me $4.01. Digital Realty Trust paid me $1.27. Broadcom $1.50. And QIOD yet again paid me $2.67. And that brought me to a total of $40.89. And I'm gonna stop right there because for a lot of you guys, you might receive that in dividends every day, every week, but for me, that is the most I've ever received in 1 month from passive income, simply by investing in the positions and doing absolutely nothing except making sure they're the right positions and they have the right history and continuously investing into them. And I've never made that much every single month. So especially when you're someone like me that doesn't invest a lot, I only invest $30 every single week, which isn't a lot for most people. It's really, really awesome to kind of sit back and hone in on these moments and know that you just kind of set a new precedent and hopefully it can get better from that point on. So this was a really amazing milestone for me. But anyway, getting back to the video, that left me with a grand total for the year of $102.14. Comparing that to 2024 already, that's a third of what I made all of last year. And also I'm currently averaging $34.05. That's pretty cool too. Now again, what's important to me, one of the motivational tactics I have being a low budget investor is seeing how I'm doing historically, in comparison to myself in the recent years of investing. So I like to compare the previous month that I'm talking about with that same month 1 year prior. And this is what I came up with. The almost $41 that I made for this March of 2025 was actually over $12 more than what I made in March of last year. That was about a 42.6% increase. And my 2024 average is $6.44 more than last year, which is amazing. So that's really quick, and of course I didn't mention what the overall total is because we're only 3 months in. Again, it's about a third already of what it was last year, but I'll focus more on it maybe halfway, so at the end of June. But another thing I like to do, another motivational tactic, if you've watched my videos, you'll notice that I also like to see what my future potential could be, which is always increasing every month, and that's always great. But this is where we're at for this month. And mind you, I like to break it down to 2 different categories. One, future, where if I continue to invest $30 every single week and how that would look for the next 5, 10, and 15 years. And another one where I don't. I stop right now, I activate DRIP for every position that pays a dividend, and I sit back and just let it ride for the same 3 periods of time. So if we assume that I stop investing and I just let DRIP do its thing, in 5 years from now, my portfolio should start generating me $562 per year in passive income. 10 years from now, it'd be $870. And in 15 years, we're looking at $1,358 from year from that point on, which is really awesome. In 15 years, I can probably do a whole lot with that despite inflation. But this is what happens if I simply just add $1,560 per year or $30 every single week. And so I know I didn't mention this earlier, but this is all assuming a 5% share price growth. And with how the market has treated my portfolio, that's where I'm roughly at after a year of growth. So with investing $30 a week, 5 years from now, my portfolio would pay me $782 per year, about $220 more than if I didn't. 10 years from now, I'm looking at $1,455, almost $600 more. And in 15 years, I'm looking at $2,530, which would be over $1,200 or almost $1,200 more than in 15 years if I did invest $30 a week. So of course, I'm going to continue investing $30 a week as long as I can. And as I've said a decent amount of times, my goal when I get to a better financial position, as far as I paid more in debts and saved up other things, I will ultimately plan on increasing my weekly investments into my portfolio, hopefully $40 to even $50 every single week, but that's definitely gonna take time. So I'll elaborate more on this in the next video, but we're definitely in a month right now where we're dealing with a lot of economic uncertainty with tariffs and what they're really for, this, that, and the other. But with all that being said, it's affecting all of our portfolios and more than likely not in the best way. So one of my goals, one of my continuous goals, is to continue to build a dividend growth portfolio that I trust to invest into, that makes me motivated to invest into it despite these economic times of uncertainty. And understand that it's not a portfolio or not a situation where I'm losing a lot of money, but a situation to where I can take advantage of cheaper stocks that should be valued higher, knowing that they'll be valued higher in the long term, because we've all seen the overall history of the S&P 500, so that's something to keep in mind. And with that, I would love to have a portfolio one day where I can just kind of set and forget, but that would require not just having the money automatically go into your account, but have it automatically disperse in whatever stocks. I'm a little far from that. And to get there, I definitely have to make sure that the positions that I'm investing into are positions that I really trust to not only provide me long-term dividend growth, but overall long-term share price growth. And one of those positions I actually invest into, they paid me this month, was SEHD. I think they really fit that category of long-term growth in both spectrums. They actually just accomplished their 2025 annual reconstitution, which I explain more in this video, and I specifically break down how this benefits low-budget investors like myself. So if you have some time, make sure you check out that video, but I appreciate you guys for watching this video. Until next time, as always, take care.